that this will work, this will not work. I created the product with us with a strength that a bank should be able to sanction limits in seconds and minutes. The business should be happening in minutes and not at the speed a bank today works in terms of sanction of limit, which could be few weeks. We used to keep looking for opportunities for what to do next. And when I read about this concept, I thought, wow, this is the thing that that receivable of the country or the enterprises in the country. I mean, this will be the good solution, that if one enterprise wants to collect money from another enterprise for the services or goods, it can get its invoices discounted. I really like the concept, and it was through technology. And in 2016 also, fintech and all these words were not there.
So every bank that you spoke to give you these two examples. Hey, like, hey, these two banks tried it. It did work. Okay. I can.
And when I googled their balance sheet in 2016, I saw the losses in their balance sheets. And
Totally missed it.
and
Yeah.
so it kind of gave me a jerk reaction that, okay, I mean, it has not worked in India.
In today's episode, we're joined by Sundeep, founder and CEO of M1xchange, one of India's platforms transforming MSME finance. A chartered accountant turned fintech innovator, Sundeep built an M1xchange to bridge the invoice discounting gap and connect over 50,000 MSMEs with 75 banks, NBFCs, facilitating invoice financing worth tens of thousands of crores. M1xchange is backed by Amazon, fueled by regulatory reform. M1xchange is reshaping India's 100 billion plus MSME credit market. Join us as we explore Sundeep's journey of disrupting traditional finance and building a category defining digital lending company in the fintech ecosystem. Hi, Sundeep. Welcome to the show. Great to have you here.
Thank you, Mazin. Nice of you to host me.
It's our pleasure. Really looking forward to it. So let's jump in with the rapid fire round. So to get started, if you could shadow any business leader for a week, who would it be and why?
Given to shadow, I would love to shadow our current Prime Minister, Mr. Modi. I love him as a leader. With the zeal and the spirit, he is able to bring solutions to the challenges at a large scale in a country like India. And the digital transformation that we are all thriving on is essentially his input and his setup, which we are all enjoying. So I would love to spend that 1 week with him and learn from him.
Nice. That's a good one. And what's one regulation that you wish you could overwrite?
Yes. So the regulation I would really recommend is, that can create an infrastructure and the capital that is required to flourish and to nurture more and more startups ecosystem in India. The system that can bring innovation, whether it's technology, whether it's pharma, whether it is medical science, many things that can happen in the country. And if you read the history of the of US, I mean, the all the firing companies, or all the companies that are now today we are all in the world globally using, they have all thrived on this startup and the capital that was invested, the risk capital. So the regulation which can enable this, if that can be changed.
No, makes sense. Yeah, good answer. What's one finance topic that should be taught in schools?
Marine, in the early days, everyone looks for doing something that can bring him money, especially when we are coming out of the schools and the colleges, and these are the formative years. I would say the topic that can tell us that if we create value of our work, the money will follow. So whatever we are learning, if we're practicing it to the best of our ability, the value in it will follow by way of money. So if we can just practice this and nurture this, I learned a lot after many years of practical experience. But if this is taught in school, they'll be very, very useful.
Nice. That's a good one. What's one thing that you've changed your mind about in the last 5 years?
Uh, Last 5 years, I have realized that if one focuses on something and be after it on that one thing, then it gets accomplished, come what so may. If you spread yourself or you spread your focus on many things, then it becomes a kind of a conglomerate or a khichdi of many things. You may get success, you may not, but if you're focusing, you definitely get your success.
That's interesting. And it's really hard to do as a founder, right? Because there's so many things to do. I think
When you are into creative work, there are so many ideas and thoughts and people around that come to you, and when you're in a growing phase,
yeah.
you have to keep listening, keep absorbing, but then keep your focus on that one thing which you thought through.
And the last one for the rapid fire: what's one truth that few people agree with you on?
uh, that the few people agree on is I'm being truthful in giving a feedback, and that feedback would be very useful for the person on the other side. Now, that person on the I mean, whether you give that feedback in a manner that that person is able to fathom or is not able to fathom, uh, is something that the team keeps coming back to me. If we can be more nicer in giving a feedback, and I feel that if we are truthful to the other side, it's more beneficial to him than not being beneficial to me.
So being direct versus being
Yes.
empathetic, and yeah, that's a bit of a trade-off. And I think there's different schools of thoughts on that. So uh, yeah, fair enough. So Sandeep, tell us about where you grew up and in your kind of early days. Would love to hear about your journey from the start.
Yeah, sure. So I've been born, brought up all through in Delhi, and studied my college school from Delhi Public School, DPS in Delhi, Mathura Road, followed by University of Delhi College, followed by Chartered Accountancy, uh, and way back in the year 1995, when or 96 rather, when I finished my CA. Those days, the fintech and technology and capital and all these things were not so prevalent at all. And for starting your business, you had to get money from your own home, from your own resources. Uh, and uh, I started my first entrepreneurship journey in year 1998, when I had set up a company called Mind Integrated Solutions. This was a services company, and
And this was while you had a full-time job on the side.
so I
Or
had
this
a
was
full-time job, but from 96 to 99 or 98.
okay.
And that's when I took a leave for about 6 months, or a sabbatical for about 6 months from my boss, and I started this company. And this was more of a consulting firm, which translated itself into a private limited company later. And uh, and you had to take risks on your own. You had to manage resources within your own in those days.
And I wasn't
uh,
VC
and
market to go to
right,
or anything. That's all right. Yeah.
right.
So
And
start off as a consulting business,
it's
and you okay. And so
and
what were you consulting in? Like what kind of
yes.
companies? Yeah.
So we were more into finance and accounts and HR processes management for enterprises. And it took the shape of outsourcing services, shared services. So that means organizations today and in those days used to give their extra work, focused work for setting up books of accounts and HR processes, whether payroll, compliances, all these transactional processes, vendor payments, billing, receivables, all these things they used to outsource, and we used to run them in a process manner and through technology in due course. In due course, we developed technology, but initially it used to be more of processes that we had to manage. And that business is touchwood running decently well. One of my two of my co-founders, they are running that business very well.
So you started it with a group of three friends, or like walk us through kind of how you set it up.
Yes. So I started at as in '98, and then one of my friend Vivek, he joined me in about a year later.
Okay. Okay.
and he is the co-founder. And then the current CEO Saurav, who was one of our team members, he transitioned into a co-founder as a partner. And so the two gentlemen are still running the same.
Nice. Okay. So you set it up and got on board, and then walk us through the kind of next step, right? So you decided.
And yeah, yeah. And then in 2016,
Okay.
I
So you
branched
did
out.
this for quite a while, almost 7 8
Yeah,
years.
yeah, yeah. So 15, 16 years I ran this. And then in
Okay.
2016, I branched out to set up a fintech firm called M1xchange.
Okay.
And in 2016 also,
I
like
think
in two,
I mean, before we get into it, I want to walk. Can you walk us through the kind of thought process, right? I mean, you had this business that you'd set up and you'd built. It was running successfully. And how did you think about transitioning from that to a fintech company?
right,
How did people react around you? Would love to get into the details.
I read about this concept called TReDS in one of the newspapers, and it was a white paper released by Reserve Bank of India. And it was and I read about it and I liked the idea. And I used to be relatively free in those days because most of the business was running on a autopilot mode, courtesy these co-founders. And we used to keep looking for opportunities for what to do next, what to do next. And when I read about this concept, I thought, wow, this is the thing that that receivable of the country or the enterprises in the country. I mean, this will be the good solution, that if one enterprise wants to collect money from another enterprise for the services or goods, it can get its invoices discounted. I really like the concept, and it was through technology. And in 2016 also, fintech and all these words were not there. Okay,
Not so
so
much in India, right? Like maybe a little bit in the US, but yeah, it was still kind of early days, right? Not what it is today, for sure.
right.
Yeah.
And so I we so I when I discussed this internally with the team or with the other co-founders, I mean, they heard me. They never opposed it. And I just started on my journey of making an application to Reserve Bank of India for this project. And I took help from one or two colleagues within the ecosystem to get together the proposal and put it to RBI. And this was an RFP kind of a proposal, which we were responding to. And there were about 10 to maybe 20 other entities who had applied to RBI for this. And
Wow.
we right
So
we
quite a few
brought
people have said.
we brought diversity, because most of the other organizations who had pitched to RBI were either banks or were financial enterprises. So we were the only unique ones who were more like a services company, technology company, who had pitched for it. So so it helped us, and in the entire crowd, we got that blessing that we were one of the three people who were given the license to set it up.
Wow. Okay.
And the other two licensees, one of them was Axis Bank, and the third one was a national stock exchange, NSC and SIDBI joint venture.
Wow. Okay. That puts it into perspective, I think.
Right, right.
Yeah.
So that's when I realized that what kind of, I mean, it hit me that time that what am I getting into? And because the competition was huge,
Yeah.
standing tall in front of me. Having said that, it was one conviction was there that the solution is very good, and it should help the country. It should help the enterprises on the whole.
So
That
walk us through it, right? I mean, you read this white paper. What were your kind of takeaways, if you can kind of reflect back to that, those early days? Like, why did you think? Why were you so convinced that this was going to work?
Yeah, so Mazin, the white paper actually was referring to a similar model running in Mexico, uh, and a model called Nafin Bank, which is co-owned by the government of Mexico. And that model ran on the digital invoice, they had a GST at that time, and they could in the and the entire country was submitting invoices on that portal called Nafeen portal, which is probably like a GST portal for them. And they could get the invoices, and the banks could finance those invoices. So okay, so and in my previous venture, I had seen the problem, the challenges the organizations face for receivables management, right? So when I read about this proposal and I read about this solution, I thought, okay, this solution will solve the challenges in the entire country. I mean, that was the view that I got immediately by reading it.
And you had this model in Mexico to refer to. It actually worked somewhere, which is
Yes,
yeah,
yes, yes.
fascinating.
That conviction got kept getting stronger and stronger by the day. However, let me tell you, the caution that I got was pushed me back quite a lot. Was after I got the license to set it up, and I approached the banks.
Okay.
Banks told me this is a failed product.
Before it even been started. Wow, okay.
Why? Because factoring. It was based on the concept of factoring,
Okay. Yes, which
and
is done well in Europe, right? Like I guess it's kind of, and I think in a few places,
yes. So in India, it had not worked,
right?
uh, and they updated me about two companies who are in factoring only. One is a subsidiary of State Bank called SBI Factor, and one is a subsidiary of Canara Bank called Can Bank Factor.
Okay. So every bank that you spoke to gave you these two examples here, like, hey, these two banks tried it, it did work. Okay, I can.
And when I googled their balance sheet in 2016, I saw the losses in their balance sheets, and
It's totally missed it.
and, and
Yeah.
so it kind of
Uh,
gave me a jerk reaction that okay, I mean it has not worked in India.
yeah.
uh,
I'm like, what
and
am I getting into?
yes,
What do I know?
right.
That's amazing.
Having said that, the I had not been in the BFSI domain so far in my career, so the lack of awareness worked to my favor, because I was coming from an accounting domain, and I had seen that in accounting, their receivable management is a critical issue, and this product will help. So my conviction was strong. I was half aware of the challenge, and I jumped into it with my own capital, which was generated from my previous business.
Okay, so you didn't get any money from the banks to start off with. You just put up your
No,
own
no.
capital.
So I didn't take any money to start this new business. I took the money from my erstwhile business. I started this as a division of the erstwhile business.
Yeah.
Okay, and so we took capital from that and got into this journey, and then we had to and then we had to work on technology process with RBI to set it up, and that was a very learning experience, because it was getting built from scratch. There was no precedence in India to reflect upon,
So you
and
have to kind of actually participate in building out the actual infrastructure for it,
absolutely.
basically.
So
And it's
each
you and Axis Bank and the stock exchange, and so like these two giant companies, and you working with RBI. I mean,
yes,
and
yes.
so how did that go? I mean, like walk us through that actual process.
Right. So we used to spend long hours in the RBI workshop to set up the process of KYC, set up the process of onboarding, set up the process of agreement compilation for the three participants, whether it's a corporate or a MSME or a bank. So we had to set up those processes, and
But
then we
it's sort of an open source framework that you're already taking from, right? But we have to kind of customize it for India, or like what do you mean by set up? Because there was something that existed.
right. So the workflow diagram was there, but there was, like I said, there was no precedence to follow.
Okay, okay.
Okay,
But
in
you had
those
precedence in Mexico, I guess. That's where you had to.
right now, that was the only workflow that we had, and but we had to follow. I mean that workflow we used, and from there we built onto the India structure,
Got it.
and
Got it.
uh, and the point was that workflow did not have the legal
Understood.
documentation to support that how will the legal structure work in case there is a default, in case bank has to
Correct.
go to court, how will bank be enabled using our digital platform without having a direct connection with the customer. How will bank go to the court of law?
Yeah, actually,
So
that's that's a very
so
unique challenge.
right. So it's a marketplace. It is not a one-on-one relationship that one customer comes and he signs an agreement with State Bank, and that customer comes and he signs an agreement with, let's say, Standard Chartered Bank. Here, it's a marketplace. Nobody signs an agreement with anyone. Uh, so it's a buyer, seller, and a financier. All sign an agreement with the M1 exchange, which is a TReDS platform, which is a marketplace, and they do many to many relationships. So that means if a seller is selling goods and services to Maruti, and if he's selling to Hyundai and he's selling to Toyota, or he's selling to Mahindras. Now, all the four customers he's having, he doesn't have to sign any paperwork with any of those four customers to get his invoices discounted. And these invoices could be financed by any bank in the country, any NBFC in the country.
So anyone who wants to just plugs into the platform and then you just.
Yes. So
But
any
how do you?
right. So
But
I'll
then how
just
do banks get the data to evaluate the risk? Right.
right,
That's the.
right. So I'll just come to that. So now, when they submit the invoices, the respective customers have to come onto the platform and approve those invoices first and foremost.
Okay.
Okay, so that the invoice is genuine, there is no dispute in the invoice. So the seller and the buyer are both on the platform, and the invoice
Approving.
is approved.
So invoice is submitted and the okay. Okay. So you have
Okay.
those two. Yeah.
Now, this was one of the shortcomings of the previous challenge that India was facing through in factoring. That when the invoices were coming to the banks for factoring, the invoices were not approved by the respective customers. That means, in this example, whether it's Maruti
You
or
don't know if the customers will actually approve it. Maybe there's a dispute down the road.
right,
Yeah, understood.
because this was a technological solution, so we could onboard the respective customers and ask them to approve the invoice so that the banks can see and witness that the invoice is genuine and undisputed. Okay, so this was the first step we had to build. And then the second step was that if the banks are coming and taking a risk on Maruti or Toyota or Hyundai, in the example that we are taking, then how do they take that risk? Like the question you asked. So we therefore created a credit profile of these customers. And this credit profile we did in partnership with the credit rating agencies.
Okay.
Okay.
So the
And
credit profile is provided by M1 Exchange. It's not on the TReDS platform. Okay.
right, right. So M1 Exchange, meaning M1 Exchange is a TReDS platform. So on the TReDS platform, this profile is created for Maruti or for Toyota or for Hyundai.
Okay.
And all these companies are large companies. So obviously their information is also available in public domain. And this information is also available with the credit rating agencies. So we
Got it.
use their data to make a report, and that report is used by the banks to take a risk on the on the enterprise buyer. Okay, now the last point I'll just complete so that you get it. That now there are 70 banks, and they're all wanting to discount that invoice because it's an invoice of Maruti. So there is a bidding process. Okay, so which means that all 70 banks will offer their best rate to discount that invoice, and basis the best rate, the invoice will be discounted by the bank who wins the bid.
For each transaction, it's a bit. So even it's not like, and since you could one transaction could go to one bank, one to another bank, right? Individual transactions can
Absolutely, absolutely. So it's many to many relationships. It's not just one bank, one customer. It's one bank, thousands of customers.
yes, nice. Yeah, thank you for walking through that. So that's quite clear. So I mean, to come back to your journey, right? So you spoke to these banks. They they told you it's not going to work. You put in your own money, went out and did it. How did you actually pull this off? And keeping in mind in the backdrop, you had these big competitors who are also working with the government. You were in these workshops. how did you simultaneously build out the team, build out your product?
Right. So, Mazin, product build-up was something I had done in my previous venture quite a lot, because there also I had built products for payables, for receivables, for payroll, and so on and so forth. So that experience helped me a lot. And our product turned out to be a more robust and more easy to use product versus the competitors, because our specialization, our core was the product buildup. That created a niche for ourselves using the product strength. That was one. And then the service strength. So I was from a services background. That organization I had run for years, serving large enterprises. So the overall structure that I could set up for services turned out to be decently well, which again differentiated us from the other competitors. And what was not working in my favor, but it also turned out to be a blessing, is that I was not from the BFSI sector. So I was not ready to. I did not have any pre notions that this will work, this will not work. I worked. I created the product with us with a strength that a bank should be able to sanction limits in seconds and minutes. The business should be happening in minutes and not at the speed a bank today works in terms of sanction of limit, which could be few weeks. So all the product was built with a completely fresh perspective, uh, and uh, and that helped to my attention. That helped to my favor. Helped in our favor, and we had to convince private sector banks, who took the plunge first.
Yeah, so walk us through that. Like the first few private sector banks that you went to, what were like? How did you convince them? How did you get them over there? It's a marketplace, right? The first few always the hardest.
So we got very good support from three private sector banks: IndusInd Bank, Yes Bank, and IDFC Bank. So all the three banks took interest in the product. Their product heads had a belief that this product will fire. They will be able to scale up, and so they believed in it. However, public sector banks did not even touch it in the initial period, and they supported me in a manner that these three private banks used to help me in crafting solutions, or in discussing the solutions and discussing the processes. And the second good thing was happening was that one of my mentor, I had taken a mentor from the banking industry, and he was the retired DMD from a State Bank of India. So he mentored on lot of processes and lot of solutions, which helped me to craft this overall M1 exchange TReDS as us.
That's incredible. And so, okay, so you now, you have some interest from some private banks. You have your product built out. You kind of work through the regulation. Uh, what were some of the mistakes that you made along the journey? I mean, I'm sure there were many. Coming as an outsider, you had a fresh take, but I'm sure you made some mistakes as well. Could you tell us about some of the early mistakes?
Right. So before I come to mistakes, Mazin, another good thing which worked in our favor was the build-up of the team.
Okay.
So we could collect some of the finest bankers to work with us as full-time team members,
How did you
and
convince them?
that
Because
was a big task to
I
convince
can
them.
imagine, right? Like you're from not from the industry. This is a new thing, and yeah, how did you?
One of the two gentlemen, or rather three people, I would say, who turned out to be, who had confidence on the whole process. One of them was the CTO, who was the technology partner. The second person was the COO, who was the sales and operations head, and the third was the sales leader at in the West region. So these three people were the early ones who could lay confidence on the concept and the fact that uh, this could be a new revolution in the industry. They had that belief in that concept, and they joined the bandwagon. And thereafter, others followed. I mean, then it was easier to get more people on the team. So the early mistake that I did was the fact, and that was the need of the hour, was to get the solution ready ASAP.
But you kind of had to, right? You were in this, you were working with the government, you had to kind of build something out. But you built,
Yes.
okay,
So I outsourced the work to a IT company
okay,
rather than creating an in-house team, because building an in-house team was going to take time.
yes.
So I outsourced the work to an IT company, and the architecture and the framework that they worked upon, uh, we had to change it subsequently 3 years later.
So rewrite the
So,
whole thing. Yeah,
right,
that's
rewrite the
that's
whole
what
thing,
happens.
because the scalability, because it was not fully scalable.
Mm.
So at that time it served the purpose, but subsequently we had to kind of rewrite it.
Which is interesting, and I think it's an interesting, kind of point for our listeners as well, right? I think when you're starting up, it's tempting to go and outsource it, but you do learn from building it as well. And so I guess maybe looking back, would you have done it differently? Would you have built a tech team in house, or do you still think it was the right decision to outsource given the circumstances?
Right. So Mazin, we built the tech team in house. It took us some months before the tech team was ready. But in the meanwhile, we got the solution ready from outside, adopted the solution. That tech team then worked on upscaling it, and then finally we reordered it completely. And today we have the full stack tech team, internal tech team, and they manage the end-to-end process.
More recently, I believe last year you grew almost 100% year over year. What is, some of the bottlenecks, and how do you kind of scale that fast? uh, what are
Right.
some of the big challenges with growth at that
Uh,
pace?
Right. So, in terms of challenges, I would say first and foremost challenge was the bank's liquidity or acceptance to the product. So, over a period of time, it has been overcome, and the magic started happening when the public sector banks got into it.
Got it.
Okay. And we were more suited for public sector banks, which we realized later after working with them, is the fact that they do not have such large technology teams as private banks.
Right. So they
Uh,
can't build stuff out the way that, yeah, no, I get it.
and they don't have like a sales structure like a private bank. They have more of a branch banking.
So slow to adopt, but longer lifetime value for
Right.
these
So
banks.
for them, we were like a biggest value add, because we were bringing technology and business together. There was no fixed cost for them. They were playing in, plugging in and playing. So the volume scale up started happening when the public sector bank started taking interest in it. That was the first point. And the second trigger, also what happened is that the cost of MSME financing for a bank came down by almost 70-80% in our case. So because we were doing the KYC, we were doing the onboarding, we were doing the agreements. So
Acquisition costs so
right,
much lower, right? Yes, yeah.
banks just had to come and do a treasury work. They just have to come and see on the screen, like they buy, if you buy shares or bonds, so they're buying invoices. So they don't have to worry about the seller or a buyer KYC, or a location or their office address or their agreement. These are the things which take time for a bank to onboard a customer and get it ready. Now we were getting a ready-made structure and a platform and a customer to their desk. They just had to open the computer and start bidding.
Which is amazing. It's incredible value proposition for banks. But and we've spoken a lot about banks. I want to talk about the other side. How did you get those customers, right? How did you get buyers and sellers on the platform?
Right. Now, the second challenge we were facing is the customer coming onto the platform and approving the invoice. So, for an MSME, it is a bonanza that he's getting his invoices discounted, he's getting his payments on day zero, and when the banks are bidding, then the rate of interest will be the most competitive. He doesn't have to step
Get
out of.
around, right? Instead of the MSE going and looking at banks, banks are coming to them and giving them offers, actually, right?
Absolutely, absolutely. For them, it was a bonanza. Now, who was the difficult customer? Was the large corporate, which is MSME's customer. Why should I come and approve the invoice? Why should I do extra work? What's in it for me? Uh, it took us almost 2 years to crack this point, that there were two things we were bringing on table for them. One was that the cost of financing for the MSME went down by 10 percentage points. Okay, so now an MSME who gets his funding, unsecured funding, between 15 to 18% per annum, on our on M1 Exchange platform, the risk was being taken on his customer, which is a large company.
So you're flipping it around, right? And now it's
Right?
not. Yeah, exactly. It is
So
what
the
it is.
cost of funding came down to 8% to 9% per annum.
Wow, it's like literally half it. Half it.
Yes.
That's amazing.
So because there was a savings on the table to the tune of 8 to 9%,
Mm.
the cost of doing business was coming down, and therefore the corporate started renegotiating their prices with the SMEs.
But if you use the platform, then we pay you less because now you're,
So
yeah.
then it became a fantastic model. It has turned out to be a fantastic model, that if an enterprise, large enterprise, brings its suppliers on the platform, and those suppliers cost of doing, I mean, assuming every enterprise has at least 100 crore purchases on a monthly basis, any enterprise which is 1,000 crore enterprise or a 2,000 crore enterprise, they have purchases worth 50 to 100 crores in a month. And these purchases are, if they're from an SME enterprise, and this value of financing is coming down from 15, 18% to 9% or 8%.
It's a game changer.
Right. So then the cost of the production is renegotiated with the SME, and that built the magic that the large enterprises started taking interest in the platform.
Amazing. So that's how you created that flywheel. It kind of closed the loop.
Now it's become a known industry point, that if you're on M1 Exchange TReDS platform, you can save at least 5 to 6% in your production financing cost.
Wow. So that's the pitch to enterprises, which is clear. Bring your suppliers on board, you save 5%, just your raw material cost goes down.
Absolutely.
Absolutely.
And for the bank, yeah, it's a win-win, because they are financing, they are getting business at a very, very low price.
Wow. And the other thing that's impressive is, unlike most fintechs that we read about, you've built a profitable business. Was that a conscious decision? And I mean, would love to kind of hear about your thought process. Of course, you're putting up your own money. That kind of changes it versus a VC backed business. But
So, Mazin, we did raise funds in 2018. We did raise funds.
but I mean, you came from that mentality, right? And when you put in your own money, I think it's the thought process that kind of, yeah.
Absolutely, you're right. So, one thing what we did is we always maintained the pricing in a manner that we are bringing savings to the entire ecosystem, whether it's a bank or whether it's a SME enterprise. We share a slice of that saving, and in the initial period we had to discount or give discount for a proof of concept to every new person who came on the platform. We used to waive his fees for 1 month, 2 months, 3 months. For banks, we waived the fees for 2 years. Right. So I started, yeah. I started in 2017. Entire of 2017, entire of 2018, we did not charge the banks. And
And I mean, this is like counterintuitive, right? Because the advice that you get is, start charging from day one. How did you kind of make that switch then when you told the banks, hey, now after 2 years, we're going to start charging you?
because the volumes were growing, Mazin, and the importance of the platform was growing in the industry as a whole, that kind of gave the confidence that this platform will make a value add to the country and to all the members in the country, it is not going to go anywhere. And the government support started coming in terms of backing it up more in terms of regulatory backup, because they were seeing that the MSMEs are getting their dues. So that confidence kept the ball moving. And the second confidence was that the competition, the other two exchanges who were larger enterprises, uh, they were also following this process, that they had also not started charging the banks. And so when three friends are in it together, uh, that gives a confidence to the other one. Okay, if I'm doing it, they're also doing it, then I'm doing something right.
Yes. Fantastic.
So it that kept the ball going. And after 2 years, when we had to sit with the banks and discuss pricing with them, it was a hard ball. Somebody who's used to doing it for free,
Suddenly,
and
that's
bank is
true.
a, yeah, and bank is a very very large financial institution. It is not easy to negotiate terms with them. However, they supported, they understood the point, and in after 2 years, then we started charging pricing from all the participants at all levels. So it took us 3 years to get our full price. However, what we were sure is, when we were signing the agreements with anyone and everyone, we were ensuring that we are signing the agreements with a price model from the day zero.
That's a good one. So they know, and it's not a surprise when they get there at that point. You've told them like, hey, okay, it's 2 years, but this is the pricing. Yeah.
So that and we knew, and we used to do our Excel every now and then, and that calculation was important from an investor's point of view also.
Yes.
That if
When we
if you
turn
are
the tap on, how much? Yeah. Yeah.
so if we were to work full scale, if we are charging full scale, would we be profitable or we will not be profitable? So that hat we were wearing and continuously keeping an eye on that.
And if you can share, when you did kind of turn it on, did you see more banks drop off than expected or less? I mean, kind of where did you end up on that? And
No, so no banks dropped off. So because in 2 years, banks had tasted the entire process and the volume business they were doing. So if they would have dropped off, they would have missed on the opportunity in comparison to the other bank, right? So the bank who is today number one or number two or number three, they would have fallen in their position in the volumes, because now we are doing.
you created enough value for everybody that it was like you started charging and it was fine.
So, Mazin, this year, as we are ending the year in March 2025, this year we are going to do 80,000 crore worth of invoice discounting. So, if banks would have dropped off, uh,
Lost a big chunk of that. Yeah.
so they would have lost on this kind of volume.
Amazing. It's been incredible. And so now, looking to the future, right? You've kind of grown at an incredible pace. Uh, what what do you need to do to kind of, and what needs to change? I guess, and let's focus on that to kind of take it to the next phase of growth. And what is your vision for the next 5 to 10 years for the company?
Right. So, Mazin, a lot of changes have happened, courtesy the regulatory changes. The government has supported it, like I was mentioning. Uh, a few changes is that the definition of MSME itself has undergone a change. Okay, earlier the MSME, when we started our business, that time the definition of MSME was any enterprise doing business up to 50 crores per annum.
This is a number change. Okay.
Now that definition got changed to 250 crores per annum.
Okay.
Okay, so it kind of became five times for us. And in the recent budget in January 2025, the finance February 25, finance minister has made it 500 crores per annum.
So it's just
Okay.
a much bigger category now.
Yes, so it's yet to be notified. She's already no, announced in her budget speech. So the notification is yet to be released. So that really broadened the market for us. Number one. Number two, because this was going very, very well, government announced, MSME ministry announced that all enterprises in India who uh, who are who are working with MSME enterprises have to per force register on TReDS.
Oh, so they've mandated it now. So people
Yeah,
have to.
yeah. So it is not mandated that you have to do business, but it is mandated that you onboard on TReDS so that the infrastructure is there and your suppliers can take the benefit if they wish to.
Nice.
So
Wow,
that
that's huge.
that yeah, it's a huge impetus that we got, and that kind of helped us to onboard the large enterprises. Then the second challenge was to convince them to start doing business, which we did. I mean, which was grounds up we had to do.
Yeah.
But the government support that at least come on trades
Give
was
them that
very
nudge to at least, yeah, first step,
right.
and then you can
Yes,
convert.
yes, yes. Now the third thing which has happened is under the Factoring Act in the country, uh, trade credit insurance has been allowed for the first time. Okay,
Okay.
so it means the insurance companies also will now come on trades and they will insure the receivable of an SME.
So it'll be like underwriting. So the bank will resell it to
Right.
another company. Okay.
Right. So therefore, if there is a default, the insurance company will has underwritten the risk of a bank. They will share the risk with the bank.
But then why do you need the bank to be involved at all?
No, so the funding comes from the bank. The insurance insures the receiver.
That's the risk portion. Okay. Okay. So it's just, the bank isn't just purely doing treasury very narrowly, right? Like, I
Yeah.
mean,
Now
that's
this, I mean, this insurance bit is yet to go live. I mean, this is a recent change.
hmm.
This will be a new model further added to enable this financing go down to deep tier.
Yeah. So you
Okay,
can
so
scale broader, and there you don't want to take on certain categories, or you.
right, so banks may not be ready to take risk on every enterprise, smaller enterprises. Now this insurance company participation will be able to broaden that risk and therefore give them encouragement to go further deeper in the risk metrics. So all this is in the pipeline. This is all in the I mean all notified, all getting under implementation in few weeks, months. All this will be live.
A
So
lot to look forward to. Exciting space to be in
lot
for
to
sure.
look forward to. You're right. That is going to help us. The second thing that Mazin, what we've done is as M1, we have also started doing cross border.
Okay.
Okay, so whatever we are doing in the domestic market, we have started doing cross-border financing for Indian exporters, oblique importers.
Ah, so it's the
Okay,
same set of customers, but you're just servicing them for like a
yes,
broader range of transactions.
absolutely. And that unit we have set up out of Gift City. The Gift City is the SEZ set up in Gujarat, financial SEZ. Uh, so that the foreign money, which is the dollar money, can be used for financing these enterprises. And the third step that we've taken is that we have replicated TReDS in other developing countries. So we are already launched in, we have launched in, launched in one country, we are live, and we are launching in five more countries in the next, in this financial year, the new upcoming financial year.
Wow.
So this is actually going global. And the
Quick question there. I mean, it sounds like it's a bit counterintuitive because you've spoken about how focus is so important, and it's actually one of the things you learned in the last few years. But launching five countries at once, what's the thought process? I'm sure you've really thought about it.
So, Nazin, the thought process is that we have already built the product. Now it's the same product which is going in different countries. We are not rebuilding it. It's only the expansion at a geographical level, and we are partnering with the banks who are taking it in their respective geographies. We are not doing it on our own, so that we can maintain our focus. That's
You
one.
kind of realize that banks are the entry point, right? And if you get to banks, then you get access to everybody else because they have the relationships. Yeah.
Absolutely. And the last point is that in this journey is that if this domestic network can become a global network, then the magic will be much bigger. So it's the same thing. It's just that it is expanding its entire look and reach at a global level.
Many years iterating to find a model that worked, and now it's ready to scale, which is amazing. And talking about the future, one thing that I do want to ask you about is, the role of tech. I think there are several, AI, blockchain, a lot of kind of tech buzzwords, I guess, that is applicable to your industry. I want to get your thoughts on it, and I mean, is it a fad? Do you see AI playing a role in factoring? Do you see blockchain playing a role?
So we are already using blockchain for duplicity check. Okay, so that's one use case that we are following. Having said that, there are other use cases that will be coming up in as innovative solutions from our side in coming years. So whether it's blockchain, whether it's artificial intelligence, now even artificial intelligence is of immense value to us because whatever we are doing, we are continuously working to crash the time further in our service delivery. So whatever machine can do automatically, that those modules are being added in the system, so that for the users the process is more automatic. That's one point on the AI side. And the third is the data analytics, because we are collecting so much of data between buyer and seller. We are using data for going into deep tier, like I was mentioning earlier, right? So the size of the buyer on whom the risk is being taken is getting smaller and smaller.
Because they're latching on to the kind of upstream person that is selling it to, and
Right. So therefore, data analytics is the key. Whatever technology is being used, whether it's AI or ML, they are being used more for data and analytics, so that the decision making is faster and we can go into deep tiers.
versus on the customer servicing side, which makes a lot of sense. And it's amazing. I mean, it's been a journey of you starting off with manual processes in your first business to then gradually automating it and then continuing to automate faster and faster. and so it's incredible. To wrap this up, this is one question we asked all our guests. We could keep going, but we're at time. What's some unfiltered feedback that you received that really impacted you personally or professionally?
So the unfiltered feedback, one is on the personal side that I got from from my main mentor, is about being more truthful and being more transparent in whatever I'm following, working, whether it's in the professional life or in the personal life.
Wow.
And
In what
this
context? I mean, this. I feel like there's a story behind this advice.
So it's more about my way of working and how it can go better to so that I can speak what is there in my heart and in my thoughts to the person on the other side, rather than I am saying something else and following something else. And the second unfiltered advice is that my professional mentor keeps mentoring me about maintaining a balance between transactional and I would say and strategic mix balance, so that neither is heavy on the other. It's important that one keeps an eye on the transactionals, but it is important that one keeps an eye on the strategic vision as well. So balancing it out is very important. And third, self realization, which I was telling you earlier, is maintaining a very focused approach on towards one product, one way of doing it, so that one follows it all through.
Amazing, incredible advice to end the podcast with. Thank you, Sudeep, for being on the show. Was amazing to have you here.
Thank you, Mazin. It was nice talking to you. We'll stay in touch.